Hey crypto friends, for those of you who are new to the channel, my name is Garrett and I am a crypto day trader who absolutely loves trading with moving averages. And in today's educational video, I'm going to be showing you guys how I personally spot potential tops when I am charting and day trading on any given day. And for those of you who love trading crypto and would like to try out the same crypto exchange that I use on a daily basis, feel free to go ahead and try out the Bullish exchange here with the link in the video description down below this video. I personally love this exchange because they allow anybody from anywhere to be able to sign up and trade crypto futures. So if you are from the United States like I am and you want to trade crypto futures, you can do it right here on the Bullish exchange. All right guys, so we are just going to dive right into this video and get right to it. This is going to be probably a little bit of a shorter video because there's really not much to really discuss here. It's more of an awareness type thing for you guys to be aware of what to do and how to spot where potential tops could be. And that's pretty much all I'm going to show you here. So we are just going to go to this random 1 hour H bar chart, Hedera hash graph here. And I'm just going to go ahead and explain real quick exactly what I look for here, because I mean, realistically, there's really not much to it. It's very, very simple to do. You just have to kind of let go of your emotions and kind of just take a look at price action and pay attention to price action, and you'll be good to go. So realistically, there's three things that I look for when I am looking to spot potential tops. Now, notice I said potential tops here, okay? So what I'm talking about here is this is not something where it's like a step-by-step program here where you guys are going to follow this and it's going to be 100% every single time. That's not how trading works, okay? If it was that simple, everybody in this market would be rich AF, okay? So keep that in mind here, all right? Nothing is ever perfect, all right? But 9 times out of 10, it's usually correct, all right? So the three things that I look for here are, the first thing that I look for is I look for large deviations from the moving average, all right? Now what I mean by that is when I'm sitting here and I'm charting out the 1 hour chart here, if I'm currently seeing price action and the candles of the price action, if I'm seeing price actions deviate very far away from my shortest moving average here, which is the 7 period SMA, it's the SMA that I use pretty much at all times when I'm trading. When I see price action start to move very far away from this moving average here, that tells me here that, okay, we are very, very overextended, extended here, and we could be due for a move to the downside here very, very soon. All right. Now, as you guys can clearly see right here, we did end up deviating very far away from this moving average here, as you guys can clearly see from the top of this candle all the way down to the moving average here. That's a pretty far distance going on right there. Now, another spot where that ended up happening was pretty much right here as well. All right. Now, this one isn't too far, but it is still pretty damn far. We had this big, gigantic green candle go up, and we deviated pretty far away from the moving average here. And as you guys can clearly see, the next candles that followed afterwards ended up being bearish and going to the downside. And then we ended up going back a little bit up higher, but we did not end up closing higher than this previous big green candle. So that kind of made sure that we were going to drop down even further, which we did end up doing that. All right. Now, here is another good example. Now here, as you guys can clearly tell right here, it did not happen right in here. All right. Now for this example going on right here, as far as large deviations from the moving average, this wasn't a very large deviation from the moving average right here, all right? So again, like I was mentioning earlier, it is not something where it's like a step-by-step program where you can just follow and it's going to happen every single time, because as you guys can clearly see right there, in that specific scenario right in here, it did not happen. But move over a few hours later, or like a whole day later, and it did happen right in here. All right. So as you guys can clearly see, price action went all the way, ended up going all the way up, and we ended up deviating very, very far away from the moving average. And guess what? We ended up coming back down once again, because guess what? Nothing can go straight up forever. Eventually, things got to come down and make a small minor correction here. All right. Now, the same is true when price action is going from the downside to the upside upside as well. All right. As you guys can clearly see here, once price action it did end up coming down when we deviated very, very far away on the downside from the moving average here. We ended up starting to correct and go back up for a little bit of momentum right there. And the same thing happened again right here. We ended up coming down, deviated very far away from the moving average and started going back up again. And it's the same thing that happened right here as well. All right. So you can kind of see these patterns here that I am talking about when I am talking about one of the things that I look for is overall large deviations from the moving average. All right. Typically what happens here is when things are bearish, price action is usually underneath the moving average here. When things are bullish, price action is usually above this moving average right here. All right. And that's kind of where the overall deviation comes from as well. Okay. So, and you can see that pretty much on just about any time frame as well. We are looking at the 1 hour time frame here. I tend to trade the 1 hour time frame quite often. But if we go ahead just for shits and giggles here, just for fun, if we go ahead and move it over to the 15-minute chart real quick or something like that, you can clearly see that the same thing ended up happening right down here as well. We deviated very far away from the moving average, and no, instead of going back up, we did not end up going back up, but instead we ended up going sideways, literally straight sideways. So we didn't continue to go down, we just continued to go sideways and then eventually gained momentum and went to the upside. But as you can clearly see, once we did go to the upside here, once we did deviate far away from the moving average here, we did end up coming back down for a little minor correction as well. Okay. Now, let's see here. Let's go ahead and move to, I don't know, we'll go ahead and move to the 4 hour chart now and just look at this as an example now. All right. So the same thing is true here on the 4 hour chart also. Okay. So as you guys can clearly see, with this big downward move that we had right back here, just a few weeks ago, actually, we deviated very, very far away from the moving average. Boom, that tells me that we probably going to end up going to the upside here very, very soon. That's exactly what happened right there as well. Okay. Now, again, the same thing happened again right up in here. We ended up coming up to the peak up here and ended up obviously deviating really far away from the moving average once again, and eventually started to come back down once more again and started to, go back to the downside. And as you guys can clearly see, that was a big downward movement going on right there. So overall here, when I'm talking about deviations from the moving average, what I am basically talking about here is basically when price action gets very far away from the moving average here. All right. Because again, nothing can just go straight up forever and ever and ever. Okay. Now, another thing that I look at here is bearish candlestick patterns. Okay. So if we go ahead and we look at bearish candlestick patterns here, this is my little cheat sheet that I've got right here, and these are pretty much the 4 most popular bearish candlestick patterns to look out for. You've got the hanging man candle right here, which happens at the top of an uptrend. You've got a shooting star candle here that usually happens at the top of an uptrend. These all usually happen at the top of an uptrend. So you got your shooting star candle right here, you've got your gravestone doji candle right here, and you've got your bearish spinning top candle right here as well. Now, if we go back to the charts here, we can clearly see, what do we see here? Let me grab my arrow. You can clearly see that within this candle right here, we have got a hanging man candle. So once you start to see this candle right here, that tells us, okay, well, bears have definitely taken over control. You can clearly see it in the candlestick pattern going on right here. And as you can see with the next candle that opened, we ended up going down again and down again and down even further. And we just ended up continuing to go down, down, down. All right. So that is a perfect example of a hanging man candle right there. And as you guys can clearly see, we had another little hanging man candle going on right here as well with this one. So this is, again, spotting the potential top right here. We've got this bearish hanging man candle, and as you guys can clearly tell, price action went pretty flat for about 1, 2, 3, 4, about 3 or 4 candles right in here before we ended up just continuing to drop to the downside once more again. All right. So I also look at bearish candlestick patterns as well, because bearish candlestick patterns, they really do help you to tell you a lot about what the overall market is doing and what overall sentiment in the market is doing as well. Okay. Now here's a little bit of a different candle here. Okay. Now this one right here, This one is technically considered a bearish spinning top candle. It's a little bit of a fat bearish spinning top candle, but we still have equal length wicks on both the south side and the north side of it, as you guys can clearly see. So technically it is still considered a bearish spinning top. And as you guys can clearly tell, with a bearish spinning top, it usually signals that prices are going to end up coming back down to the downside. And as you guys can clearly see, that's exactly what happened here. All right. Now, the third and final way that I look for, well, let me go ahead and show you one more example here, because there's one right here staring at me right in the face. All right. So this is another perfect example right here. Okay, this candle right in here. All right, now this is technically this is a shooting star candle going on right here, and that tells us that bullish momentum has pretty much gotten very, very weak, and bearish momentum has started to take over. And as you guys can clearly tell, once we closed that shooting star candle, we ended up opening up next, and we ended up going up a little bit higher, but overall we ended up going downwards. All right, and that right there pretty much confirmed it. Okay, so you want to be looking at these candlestick types these different types of candlestick patterns as well, because they tell you a lot about the overall momentum in the overall market as far as what is going on whatever time frame you are currently trading. Now, the last and final way that I look for potential tops of an uptrend is with level rejections. Okay, so what I like to use is horizontal support and resistance levels. These are obviously these purple lines in here are obviously my current resistance levels, my current big resistance levels, as you guys can clearly see. And so how I would have traded this is not only, for instance, when we went up all the way here, and this horizontal level comes from this high that we created back here on this upswing over here. Okay, so we clearly have a good level of resistance going on right there. Okay, we obviously went up and tried to gain enough momentum to breach it, and it didn't happen right here. And we tried to do it again right here, it didn't happen right here, and we tried to do it again right here for a fourth time. All right, and as you guys can clearly see, once we ended up hitting that level, what ended up happening? You can see it in the candlesticks themselves, okay? So when we take a look at the actual candlesticks, we can clearly see that we did not have a candle closure above this level, all right? Now, because we didn't have a candle closure above that resistance level, that tells me that the market was not bullish enough, or sentiment was not bullish enough, or there was not enough liquidity in the market, or enough bullish liquidity in the market to be able to push the price higher than this resistance area. All right, there were still a lot of people who wanted to sell at this level, and that's exactly what ended up happening here. We ended up going up to that level right in here. As you guys can clearly see, we ended up touching the line right here, and then the next candle opened and we ended up coming right above the line, but we didn't close above it. And then the next candle ended up opening and it finally ended up dropping us. And that's kind of what you want to look for when you are looking for potential tops in the overall market here, okay? Because that right there would have told me that I need to short the shit out of this market right here, and I need to bet on the price dropping to the downside here, because I'm not one of those people who's scared to short the market, okay? I like to make money in both directions. If I can make money from the price dropping, I'm going to make money from the price dropping, and that's exactly what I would have ended up doing right there, okay? Now, the other thing that I also look for, or that I also do, is I also use, instead of using my horizontal lines for support and resistance, I also do use all of these moving averages for dynamic support and resistance ranges as well, okay? So as you guys can clearly see right in here, let me go ahead and move this over to the 4-hour chart here, just because it's a little simpler. Now, when we go ahead and we take a look at this, we can clearly see that, right in here, price action did end up, kind of consolidating right in here. As you can tell, we ended up going upwards right up in here. But we ended up going up to this 20 period moving average right here, but we clearly did not end up closing above it or having enough momentum to go higher than that. And because of that, that tells me right there that bears are taking over, and we should probably open a short position because the price action is going to end up moving backwards to the downside. And this was not a breakout V pattern right here like most people would expect. All right, so you would have entered a short position, you would have profited off of it a little bit, and there you go. All right, so again, I'm using the moving averages as dynamic support and resistance, and the same thing happened right in here as well. We ended up going up to the 20 period moving average once again, but it did not close above it, so that tells me that bearish momentum is still there. And then we did it again right here, and then once again that tells me bearish momentum is still there. Happened again right here, and as they are getting skinnier and skinnier, we start moving upwards to these other levels of dynamic support and resistance as well, which right here would have been the 50 period moving average. So as you guys can clearly tell, happened again right there. We ended up going up to the 50 period moving average, and we did not end up breaching above it or going any higher than it, and instead we ended up moving backwards to the downside. So overall here, guys, there's a lot of different ways that you can try to figure out where potential tops are in the market on pretty much any time frame out there. Okay, it just is a matter of looking at the overall price action itself, looking at the candlesticks and seeing what the candlesticks are doing. All right, do not be afraid to look at the candlesticks and really try to understand what the candlesticks are telling you, because they can really tell you a lot about what the overall market is doing here, guys. So before I go ahead and wrap up this video, as always, guys, if you enjoyed this one and you feel like you got some decent value out of it, please be sure to go ahead and subscribe to the channel, hit the like button below the video, and leave me a comment below on your personal thoughts of what you thought of this video. And with that said, big thanks to all of you guys who stuck around and watched this entire video. I appreciate all of you, and I hope to see you all in my future videos.